Morning, Fractal Effects team. We're still tracking the market from the early session, so before we get started, please make sure you read the disclosure in the footer section of fractaleffects.com. If you're following along with us today, make sure you do in a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. So we had Fed Chair Powell testifying today. We also have crude oil inventories today at 10:30. So there's not too many assets that we can focus on. We might take a look at some foreign currency pairs on Forex, but I do want to go over the morning setup, as I did track it. I didn't take the trade. As mentioned before, it's about being smart. Oddly enough, what I've noticed is on these days where you do have Fed Chair Powell testifying, just like yesterday, you actually get clean setups. And I think that's by design. I think they know that people are avoiding the market. So that's their way, one, I think, of bringing people back in. And two, also repricing the market when there's not a lot of people in the markets. So it's a perfect opportunity to reprice in a clean way, and at the same time, I think it's offering up some low-hanging fruit for people who otherwise wouldn't trade. But today, we had a buy model. We had a clean MM to the upside with a 5M fair value gap there. We came in and tapped it, and then on a 1M, we tapped it and dropped all the way into this 1 hour. And that was 1 hour, and then this 15M. I can even get rid of, we'll get rid of this 1 hour just to show you guys. But there was a 1 hour fair value gap in here. So we're sitting in all-time highs. This big purple box, that's actually a DSD, a daily standard deviation, that I marked out, I believe, a couple of months ago. So we knew we were going to come up into here. This is past all-time highs, but you can see here, I'll show you what it looks like on the daily. I marked this out months ago. And again, we show you how to do this on the higher time frame. This is for us to figure out where stocks are going. We use a specific calculation to figure out the daily standard deviation. And we're right into it now. So we could either punch right through, or we could get a bit of a retracement after this. But that's the consequence encroachment, that right there, that dotted line of that daily standard deviation. We're below the day's DSD right here on the 5M. We're gesticulating below it on US 500. We're below that same 5M fair value gap from up here. And we are at 10:30 now, so even though, as mentioned before, I'm not interested in taking any trade setups today, I'm just going to follow the strategy and kind of show you guys how it normally works. So that's how it would have normally worked. You would have taken that trade setup from here all the way into the 1 hour. Always aim for the low-hanging fruit. You were able to squeeze out, I can show you what it looks like on the 1M. So that was the 1M fair value gap. It also happened to be the 10 a.m. fair value gap. That was the first fair value gap created after 10 a.m. So we didn't get exactly, we were a little short of 1 to 3, but I wanted to only take it to the midpoint of that 1 hour. I did not feel comfortable going lower than that. And as mentioned before, sorry, I should say, I did not take this trade. This was just the setup. But I knew that that's the farthest I wanted to take it, was to the midpoint of that 1 hour, because you can get a reversal, because we do have an upside expansion model, we do have a buy model. Remember, when you have a buy model, or an upside expansion model and you break the manipulation range to the upside first, you still want to only aim for the low-hanging fruit, right? Because the market wants to push up. You're not fighting the market. But we do know that there's certain areas that the market wants to retrace back into, and that becomes our low-hanging fruit, a 1 hour fair value gap, our blue zone, our DSDs. And again, we go over all of this in these specific zones in the masterclass. But yeah, it's again, everything is, the trajectory is still bullish. You can see up here, that's why we created this. This is a visual representation of what's happening on these higher time frames. We're green across the board. On the 5, the 15, the 30, the 1 hour, the 4 hour, and the daily, we are green. So you want to proceed with caution. When you get that MM, right there, there's our manipulation zone. The indicator paints that out for you. There's no indicator out there that paints out the manipulation zone in the morning. I can assure you. We sat down with the chaotician to figure out the mathematics behind it. But we broke to the top side. Let me go back up to the 5M actually so you can see it. So we broke to the upside, but we had a clean MM, meaning we did not have a double break. There's your first 5M, tapped it, and then we carried it down. But we're below the DSD. The DSD high has already been violated, meaning we punched past through it. So it's been disrespecting it. That means it could just punch back through again. But this is the point where, since we're already past 10:30, we wait for that confirmation. Confirmation, retracement, and extension. Those probabilities don't change. It's a 3-step process. Wait for the confirmation. There's a 75% chance that we are going to get a retracement after that confirmation. And then, depending on the specific day, there's a high probability that we're going to get an extension out of that range. But right now, everything is bullish except for our blue zone bias, which is partially bearish, but that could have been fulfilled here at that 1 hour. Usually I tell people, if you have a buy model and you're bullish and you have an upside expansion model and you get a clean MM to the upside, don't even take it or wait for a double break. If you really want to be super safe, make sure those line up. Because all a clean MM during a bullish bias, all that means is that we're going to get a deep retracement where you could get your 1 to 3 in and be out of the market if you don't want to wait. That's all that means. Doesn't then mean that we can't still continue up after we hit one of these higher time frame PD arrays. So here's the 50. That's the 50% of the full dealing range. So the market could still drop down below here. This would be the better place to buy. I'm not interested in buying this market unless you get a double break, a bullish confirmation, and then a retracement, and then an extension. Until you get that, this market is not something I want to buy, especially with the clean MM with 50 down here. And then US 500, having a tough time even getting past that 5M fair value gap. So it's already up here. This is where it's gesticulating. This is the 5M fair value gap. But since we're doing diverging pairs here, remember, you're always going to be able to find a zone on the diverging pair that matches up. It might not be the same zone, but it's matching up. See, we're back at that 10 a.m. fair value gap. So the 10 a.m. fair value gap is mimicking this 5M fair value gap. So we've already had one clean delivery. Now you have to wait. But always aim for the low-hanging fruit. Either don't take the trade setup when you have a bullish bias, an upside expansion model, and a clean MM to the upside, a clean break to the upside. You can either pass on that opportunity, avoid it altogether, or only aim for the low-hanging fruit, which is the closest 1 hour fair value gap, the closest blue zone, or the DSD. That's what we did, or would have done, I should say. Now let's see if we get a confirmation in either direction. We have a red box here, by the way. So even though we have an upside expansion model, New York opened well above London, we still have a red box because New York was primarily bearish. Now if we take a fib from London low, New York high, we've come back into 50, between 50 and 61%, right into this 15M fair value gap and the 1 hour fair value gap. So it could reverse from here. But the only way you could even start looking for a buy, I should mention that the bottom of our manipulation range is down here, right? I can get rid of this actually. It's right there, that green line. It's also a previous day's high. That's why that was marked out in yellow. So the only time that you could take a buy is if it sweeps here and gives you a clean MM. So if it swept down here and it gave me a 5M fair value gap on a day where we were already bullish, and we didn't have Fed Chair Powell testifying, that would be an interesting setup to go long. Or the second event that could occur that would switch your bias to bullish is you get a double break to the upside and a bullish confirmation. Now you have 2 points of confluence that are telling you that this market wants to go up. But until you get that, the session bias is still bearish. For 740, 1040, 20 minutes until 11. If we get another 5M bearish fair value gap, this thing will most likely push down. Right now the weaker pair is actually NAS. So he has 500 as the stronger pair. We almost had a double break here actually. That would have changed everything. We could be getting that push now, but we'd have to see a full break out of the range. Remember, this strategy works across the board. We use this strategy to trade Bitcoin and Ethereum on Saturdays. I don't like trading Sundays. Sundays are very chaotic. You can see some crazy whipsaw action happening in the market where just out of the blue, obviously there's no news drops on Sunday, but you'll just see one random displacing candle. It happens on Saturdays too sometimes, to be completely honest with you, but the strategy is a little bit more lenient on Saturdays. I just avoid the market on Sundays altogether. And it's no different than any other job. You don't want to be a workaholic. You don't want to be in the market every single day just because you can be. Today, perfect example. We had Fed Chair Powell testifying. I wanted to stay out of the markets altogether. And we also had crude oil inventory, so oil was off the market as well. But at the same time, I came online, I tracked it, I saw the setup, I just didn't take it. It's knowing when to avoid the trade. Remember, capital preservation, that's our primary goal. It's not trading, it's to maintain what you have and then increase. We can take a quick look at oil and see what happened with the crude oil inventories. See if that shook up the market. Look at this market though. A lot of gesticulation back and forth. There's your manipulation range low. We had a sell model. So our manipulation range high. Right here, it's a little hard to see. It's kind of clouded by all of these zones right there. It's off that candle. So this candle broke it. That candle broke it. We had a fair value gap created there, but then we punched right through it and had a double break. Now what happens once you get a double break? We get another retracement back to one of our key zones. It's sitting inside the end dog, the DSD, and then you set up with a 5M fair value gap to go long. Now obviously you want to match this with your higher time frame confluence. Are we sitting inside of a 4-hour? Have we swept anything? So no 4-hour fair value gap. We've already filled in this previous end dog. We've even bounced off the midpoint. Consequence encroachment of the wick of this candle, or the 4-hour. So this thing could be primed to go up. Remember, the 10 o'clock candle on the 4-hour time frame should be a continuation candle. You do not want it to be a reversal candle. So here we were going down. A continuation would have meant a push down unless we swept. And all we did here was hit the consequence encroachment midpoint. So that counts as a rejection technically. But that's where this gets a little muddy. On the higher time frame, it could go either way. But on the lower time frame, we've had that double break. And if this thing gave us a 5M fair value gap, that could be an entry to go long. We do have an upside expansion model. Or rather, I should say we had a upside expansion model coming in from Asia. Let's go back to NAS. Looks like we're about to get a double break. Or at least from US 500. I can't stress this enough. When you're looking at diverging pairs and you get a double break, you have to wait to get a double break on the pair that you're trading, the one that you're actually looking for the setup on. So even if we get a double break here on US 500, doesn't necessarily mean that we'll get a double break over here. But for US 500, if we get a double break, you can see that retracement and then another 5M fair value gap to potentially go long into, we haven't marked up the DSD on US 500. So still no crossover yet. The fact that this candle closed above the 5M and above the NYC fair value gap, we're most likely pushing up on US 500, at least to sweep out these highs. But we're still paused here. I'd have to see this one actually break as well. So big rejection from here. Still got 53 seconds left. Let's see if this becomes an engulfing candle. So that might have been the cleanest setup that we're going to get today. That is one hell of a deep retracement if this thing actually wants to push down. So we're back at the DST high. Nine minutes to 11. Obviously, we'd wait for confirmation if this was any other day. This already shows you though. Look at US 500 here. Already shows you sloppy price action. Right before NYC opened, literally almost over an hour before NYC opened, we had consolidation, and now look how tight this is. It already shows you that this is not good trading conditions. And even the one that we could have taken potentially on any other day. That was a short run. It wasn't even a full 1 to 3. So it lets you know what kind of a day it already is. Let's see if we break out of the range. It might be something similar to yesterday where we didn't even get a confirmation until after that window of opportunity had closed. The name of the game is patience. At its core, this is really just a 3-step process, not including the higher time frame analysis. On the lower time frame, is it a buy model or is it a sell model? Which way do we break that manipulation zone? Was it a clean break or a double break? And then you wait for your setup. Your 5M fair value gap, was that created and tapped, and then was a 1M fair value gap created and then tapped? That's it. But those 3 steps can take a while to set up. Again, patience. You can't just get FOMO and jump in blindly. If you're a new trader, reading over that checklist, those steps every single day, even before you start, and then having some practice like meditation in your day, those are the kind of things that are going to give you a good start. Most people, they learn that stuff after they start trading. They get anxiety, they get a lot of stress, cortisol, and then they start looking for ways of figuring out like how to actually bring those levels down while they're trading and how to stick to it and not get FOMO. But if you can start incorporating some of these practices right from the beginning, adopt these practices and make them part of your daily routine, you're going to be ahead of the curve. That's why I think kids would make great traders once you teach them. If you're like anywhere from 15 and up, like you can actually teach them meditation, you can teach them how to follow steps, regardless of how long it takes and how boring it might seem, but you got to wait for every single one of those steps. And they'll listen and they'll understand. But FOMO is hard. It's hard to program out once it's already in. So we're still bouncing off the DSD high. As mentioned before, there's nothing about this market that makes me want to buy it until you get a double break or a break of the manipulation range to the downside below this 50, and then a clean 5M fair value gap. Premium, discount. This is where I'd want to buy unless you get a double break, and then that changes what premium and discount is. Remember that. Double break, that's one of the reasons double break makes sense, is once you have a double break, the range changes. Your dealing range now changes, right? We've already broken the dealing range, the old one. That's why you get a confirmation, retracement, and then an extension. But right now, we're having a tough time getting over this 5M fair value gap. We've had no double break. We're 4 minutes to 11. This is still a bearish session. Not a bearish market, mind you. We're not bearish on the higher time frame. That we can just see right here visually. We're green across the board. But this session is currently bearish. We got a red box. We have a clean MM with a push down. The only thing missing is a bearish confirmation. And once that happens, if that happens, that would seal the deal for this market on any other day, of course. Now, when it comes to divergence, as mentioned before, when you get a double break on US 500 and no double break on NAS, that divergence is enough for me to call it a day. You want these two markets to be congruent. Same thing with like if you get a bearish confirmation but no bearish confirmation here, and then it eventually goes up and you get a bullish confirmation here. No, this is not interesting. You want the breaks and the confirmations to be aligned. And I've had people ask me, hey, if you get a double break over here, can I just jump in for a buy over here because it's going to most likely double break? No. Always wait for the double break or the confirmation on the pair that you're actually trading and interested in trading. The other pair is a diverging pair. You're using it to see if your current pair is going to head in that direction. Or switch over. Or switch over to the other pair. But there are people that religiously trade NAS and or religiously trade US 500 or religiously trade US 30. They don't want to trade anything else. And to those people, I say, wait for your actual asset to have the confirmation and the double break. Just because the diverging pair had it doesn't mean that the current pair that you're trading will. It's a good indication, and we use that as one of our confluence points, but it's not the be-all, end-all. 2 minutes till 11. Wow, it feels like the day's actually going by pretty quick. Feels like it's already 11, closer to 11:30. Just waiting, just stay patient. Remember, if you want to master this, make sure you watch the masterclass a couple of times. Make sure you're taking notes. Take screenshots. Drop it into a Word document. Make your own notes. Have an actual journal. Journal at the end of every single trade. What went right? What went wrong? Why? Did you get FOMO? Write the reason for why it didn't go the way you thought it was going to. If all the points of confluence are met and you still have a loss, that's fine. Remember, no strategy is 100%. It's okay to have those losses. Those are true losses. But that's no different than running your own business and having a business expense. But if you lose because of emotion, because of FOMO, because you missed one of those confluence points, that's on you. And that could have been avoided. So even if Fed Chair Powell didn't testify today, this is not a market I would trade. This is too much consolidation. We had the big push up from London. London actually offers up quite a great opportunity if somebody can trade it. If you're up during this time, or if this session falls within your schedule, this is technically the more cleaner session to trade. We had a break to the upside, and London gave us a bullish confirmation. We had a pullback, retracement, which was also, sorry, let me just zoom in here a little bit. We had a retracement, which eventually led to the double break right there, right at the DSD high, and then the market continued up. So both the spotlight strategy, confirmation, retracement, and extension would have got you that victory. Or the blue zone strategy where we had a break, something similar to New York right now. We had a break, we had a 5M fair value gap that was tapped, 1M all the way down into the blue zone. That would have been a small victory. And then once you got this confirmation here, you wouldn't have been looking for a sell. You would have kind of almost anticipated a double break. That's how these two strategies work in unison. So for London, the red box here becomes our zone, our manipulation zone. Broke up, came back, extended. But you could have taken a small sell there, which you would have, again, passed on as soon as you got that bullish confirmation. Because that bullish confirmation overrides the clean MM. Higher probability that the market's going to go up. So you use that to see where the market's going to retrace to, and then your first 5M fair value gap that was presented and tapped was here. You could have taken that all the way until at least New York opened. So definitely a cleaner session. It's not bogged down by news. And then here is Asia session. We broke up first. We manipulated up. That was the first clean 5M. We tapped it. I'm sure we created a 1M. And all the way down past the end dog would have been most likely the take profit or try to squeak out a 1 to 3. Both of these sessions can be cleaner and less volatile than obviously the New York session. New York session is where all the news drops. Let's see if we get that bearish confirmation now. We got 8 seconds left. 7. Let's see if it sticks. There you go. There's your bearish confirmation. Now we can't buy this market, regardless of what happens. That means there's an 80% chance that the market is going to drop. We already have a clean MM. So you just wait for a retracement back into one of our key zones here. DST high, the 20 EMA. We already had an early retracement. So it's going to use whatever the first fair value gap is. I'm going to get rid of this 15-minute fair value gap. It's going to use the first 5M fair value gap that's created to potentially push from. So it's hitting our DSD low. It will possibly use this to push back up into a 5M fair value gap and then look for a setup. But let's just wait and see. We got to wait for all points of confluence. It's almost like a game of tennis at times. Remember, all these points, when you hit them, something's going to happen. That's essentially what they're indicating. So a DSD low on any other day, you get a rejection off of this, that means the market's going to go up. But when you have a bearish confirmation and you hit this, it means you're going to get a retracement and then eventually push right through. We'll see. Remember, there's the bottom of our manipulation. That's the bottom of the manipulation zone. Here's the 50% of our dealing range. And then there's our blue zone. Ideally, we'd want to aim for the low-hanging fruit, which is this 15-minute fair value gap, and that's in between all of these on any other day. This is not that day. Even if we get a clean setup, told you, got to be patient. Know when to stay out of the market. About 23 minutes left in our stream. We'll still watch this, still follow it through. Let's jump back over on oil real quick just to see if it ended up going the way we thought it was going to go. 2 minutes left to see if we get this bullish confirmation, but there's our first 5M fair value gap that's being created after we had the double break, right? So we had the double break, we had the retracement, and that's the first 5M fair value gap. It's as simple as that, though. This gives you a visual representation of what's happening. This is a market translator. It's translating the algorithm of the market. So in about 1 minute 31 seconds, we'll most likely get this bullish confirmation. We already have a double break to the upside. And it will most likely go right into the DSD high. It's already disrespected the DSD low. We broke under it and then over it. That's another good indication that the market wants to go towards one direction when one DSD has been completely violated and disrespected and the other one's sitting clean. Just again, one point of confluence. Match that up with everything else. US 500's already reached that blue zone. Where's the DSD low for the US 500? It's all the way down there, sitting inside of a daily fair value gap. Look at all that clean rejection off the DSD high. That is not a coincidence. This point that doesn't even exist otherwise. So why is the market rejecting right off of this? There's a naked chart for you. Remember, we're at all-time highs. What is it rejecting off of? This is a box and a zone that only our indicator will paint out for you, the DSD high. I assure you the math behind this, 98% of people won't even understand. But that's why this is such a powerful tool. You know, it has nothing to do with harmonics patterns or any of that stuff that people will try to make you believe. Let's go back to NAS real quick. Again, bouncing off the DSD high, not a coincidence. This is also our retracement back into this zone. Remember, match up when you're looking at a diverging pair, match up the zones. They're not going to be the same zones, but they will match up. The DSD low matches up with the blue zone right here perfectly. That's not a coincidence. Show me any other indicator that will show you that. Message us. I'd love to know. What other indicator paints out sections that you can use as a divergence so you don't get fooled? Still got a bit of time before this gets up there. Let's maybe jump back over to oil. So oil looks like it's setting up. I want to see it come into this 5M fair value gap and then give me a 1M bullish fair value gap. If it just takes off without us, it takes off without us. It means we never had a foothold. Can't climb a mountain without a foothold. And you're just trying to chase down a runaway freight train. How are you going to get on a runaway freight train? You're going to hurt yourself or maybe even kill yourself. Better to just let it go by. So unless it comes into this zone, we're not interested. There's 17 minutes left in our stream. If you guys have any questions about anything, the indicator or the packages, just drop it in the comments section. We'll get back to you. Check us out on fractaleffects.com. Scroll down to the bottom there. You can see everything that's included in the package. We've put together an amazing, amazing package for you that's actually cheaper than a gym membership. More people that are spending money on trying to get fit than dedicating towards their financial future. But you get access to the 20 years of aggregate on our dashboard, broken down into charts and graphs of what the market, I told you this is an algorithm, algorithms repeat. And it shows you what the market, or what the strategy rather, did across the last 20 years. You have the back testing data in front of your eyes. You get the master class. We cut away all the fat, all the garbage that other people try to tell you. You can actually watch the entire master class over a weekend and practice in a demo account for 30 days and be ready to roll. Then we have the live trading sessions. We hold your hand. We're walking you through it step by step. You get access to our indicator suite, the spotlight indicator and the blue zone indicator, two of the strongest indicators on the market. Forward-thinking indicators, not back-lagging information indicators. These things are showing you in real time where the actual zones are, as I just showed you with DSD. You also get $15 off your next TradingView subscription. That link you can take advantage of, by the way, if you sign up with us or not. It's right there at the bottom. You can just click it, and you'll get our referral code, and it'll just take you over to TradingView, and you can just sign up. You also get access to a third-party signal service, Market Sentinel. They utilize our strategies. It's a Telegram service. You also get access to our Market Watch, where you're spending anywhere from $15 to $20 with Bloomberg or Market Watch. We offer that for free. We've hired a team whose sole purpose is to actually interview analysts and get those projections for you. See what the analysts are saying. We're not allowed to give financial advice. We're not financial advisors. But our team is interviewing the guys that can, the actual market analysts, the pundits, and showing you what their actual projections are for certain markets. So when you do your higher time frame markup, looking for an investment opportunity, then you can actually see if that lines up with the projections that the analysts are giving. Because remember, it's not just day trading. We teach you how to do swing trading, investing, how to actually utilize this information and use the math. So you don't need a financial advisor in the future. You become your own financial advisor. That's the goal. All of that for cheaper than a gym membership. And it's technically a turnkey operation. You become your own boss eventually. There's nothing out there right now that can teach you this quickly. It's the easiest strategy to learn and the fastest way to learn. I promise you. Learn it in a week, practice for a month, you're done. My honest opinion, I think that's where the future is going. There's two economies that are going to survive this entire AI boom. I think it's going to be content creation, and it's going to be investing. But it's going to become more of a reciprocal relationship, a lot tighter than it is now. For example, let's say you love to eat at McDonald's. You'll eat McDonald's, you'll invest in McDonald's stock, McDonald's will pay you a dividend. Reciprocal relationship, symbiotic relationship. You use the products pay you dividends. I think that's where it's all going. As more and more of these sectors get taken over by AI. Here's an opportunity for you to be making that extra money at home. So now we're back at that 5M fair value gap. I want to see if it sets up and gives us a 1M fair value gap. Bullish fair value gap. That becomes our foothold. While we're waiting for that, I just want to jump back over to NAS. See if we had that retracement or not. Nope. Still hasn't gotten up there. We're about to get a shift on the 5M though, 20 under the 50, so you'll see this go red soon. But this is the only place it's interesting. There's the bottom of our the bottom of our manipulation range. We have not yet crossed it, but we did dip under the 50. Did dip under the 50. Just move this up. So even though the indicator paints these out for you, previous day high, low, I just like to paint them over again every morning. It's just for my own purposes, just so it's a little bit more obvious for me. Let's jump back over to oil. Oil's a little bit more interesting right now. We have about 10 minutes left in our stream. Let's see if we get any kind of push. So we're pushing down even further. People always ask me, what do I constitute as a clean fair value gap rejection or a violated fair value gap? And it's simple as go to the 5-minute. At the very most, you should only see one candle close outside that fair value gap. And if the next candle is not an immediate rebalancing candle back into the range, then that's been violated. If it closes down here and another one closes down here, body, You can wick it, that's fine, but if a body closes down here on the 5M, that's violated for me. I'm not interested. And then I have to see another 5M fair value gap set up. Otherwise, this market is going to continue to drop. And even if it doesn't, even if it violates it and then goes up, that's fine. They're not going to get me on board. Their tricks are not going to fool me. So right now, it's still respecting this fair value gap. But let's see if it actually gives a setup. 8 minutes left. Now you want to be in a high probability trade setup 1 hour after the range formation. But once you're in, you can ride that to, again, your 1 to 3 risk to reward, or until you at least get to 1 to 2 risk to reward. Then you move your stop losses to break even. Then you can just set your TP and walk away. Then who cares what time it hits it or if it turns back around on you. You've already taken some off the table, so you've secured the bag, and then you also moved up your stop loss. So you're in a safe trade. You don't have to sit there watching the market. Well, 7 minutes left in the stream. This could be giving us that that 1M fair value gap. This could be candle 2 of that 3 candle model. 1 second. So here comes candle 3. Let's see. Remember, the indicator paints it out for you. You just have to go back in and see if it actually sticks once this candle's formed. Remember, like on a day like today with crude oil inventories and Fed Chair Powell testifying, I'm not interested, but we're just walking you over the thing. We're walking you over like just the ticker tape. Just reading that out loud, but we're not actually interested in trading this. See, closed it again. There goes your 1M for value gap. And you start the process over again, just waiting for next candle. But that's what saves us. The fact that we have so many points of confluence that we have to wait for, that's what saves us. When we don't get that, we don't jump in. Capital preservation. When you do finally get all of those and it still turns on you, that 20 to 25% chance that it could turn on you, that's fine. As mentioned before, though, that's a business expense. I'm okay with that. But you got to wait. 5 minutes left. We might not get one. But again, that's fine on a day like today where I wasn't even going to be in the markets. That is another big push up. But that becomes now candle 2 of a 3 candle model. Let's see if there's a fair value gap that's created. Have to still wait. Okay, so that I'm just going to tighten this. That's a fair value gap. That's a tap. Now I want to see it close above here on the next candle. .11 seconds left. Now this next candle is still important too. I want to see if this candle closes above this. Told you on a day like today, you want to wait for all the points of confluence. Now keep in mind, this is not a trade I'm interested in taking. I'm just marking this up and following it. Too much news today. Heavy news week in general. But if this closes above this, that's even more confluence. Sometimes you can get a retracement on this next candle. There you go. On any other day, that would have been a good setup to go long. Where's the daily? Let's go back up to the 5M for a second here just to see where the daily standard deviation is. So that's past the daily standard deviation. That's not really a 1 to 3. This is the low-hanging fruit. Always aim for the DSD. Could easily just bounce off the midpoint of this. That's only a 1.94, so it's not even enough room to grow. But nevertheless, that would have been the trade setup. We're already at 11:30, but that's your homework. US oil, take a look, come back later to see if it, or just set an alert here to let you know it's hit your, where the TP would have been. But we'll conclude the session there. Thanks for joining us. Please check us out on fractaleffects.com, where we teach high probability trading. Precision is the key, and then capital preservation is our primary goal. Check us out on all the socials, fractal.effects. Please hit the subscribe button, turn on your notifications so you know when we're live. We're live currently Tuesday, Wednesdays, and Thursdays. So we'll be live again tomorrow. Again, another high impact news day. But we'll be going over some educational stuff. Have a great